Okay, December 4, 2016. I'm going to look at 3 times ETNs right now. Basically, what I'm getting in my inbox from you guys and gals and from other places is that people are actually running into the miners, not as much as the metals themselves. I'm seeing, like if you look at GLD, you're not seeing the buying that you saw in the equity side of things. Usually the equities lead the metal higher here. So kind of like we saw with on, what was that, Thursday with the natural gas, they opened at, the indexes opened at the high and traded lower. And then Friday, finally, the natty gas came off. So looking at NUG here, these are weekly. Okay, so they're not going to be as sensitive to it. Is it basically on the way down here, it held. Okay, and if you look on the intraday, it's NUG. If you look on the intraday, you can see that with the sideways pattern, you had people buying on here. Where the price is up to the cloud, which basically means you need to go in and buy, okay, to continue to push this higher. So if you have a long position, go hit the market button kind of thing and help it along. Remember, it's basically, you know, computer driven things out there too, algos. And so you have, you know, multiple bottoms down here, draw a trend line. It broke through the horizontal. I'll treat this as kind of a pullback to retest the breakout. It'll need to hold, say, $8 on here. We have the Italian referendum, and that's basically what's been driving a lot of my emails for the gold. I am looking for some sort of tree shaking in, say, equities and the dollar. Oil, a lot of bodies moved in there last week. Brent is actually above the breakout area, but doesn't have the unbalanced volume in there, so it has room to run. So we may have one of these things where FOMC is a little more obvious, but the marketplace is dictating that we need to kind of slow things down. You know, the problem I'm having with gold right now is that with oil moving, one would assume that gold would go with it, but gold's been under the thumb of the dollar for a while. So maybe to get gold to turn and get a decent move on here, which I would still look at as a bear market bounce, the dollar would have to come off on here. What I'm seeing in a lot of charts is I am seeing volatility going to start picking up here. Like last week when we talked about these, none of these were really clear cut, and this week there's a lot of different divergences going on. One thing of note here is that this was the beginning of the year, and at Brexit, you know, some of you are talking about the Italian referendum. This was at Brexit period, and it actually marked the top in gold, but it also marked the top in, or the high in debt, the low in interest rates. So basically, as bonds came off, okay, or debt came off, gold also came down. So if there is a run in, or a bounce sharp short covering rally in debt, okay, you could see gold go higher. Gold has basically been under the thumb of the dollar. Dollar moves up, gold's come down too, but oil's been going the other way. So that's it's quite interesting what we have going on in the oil markets. Okay, so this is what we have for NUG. When I looked at where were we at? Okay, so we're at the cloud here. I usually use the cloud as resistance. Okay. To get into the cloud, you're looking at 1150 here. Here's about 11. Okay, so that would be your first areas. These, the amount of talk that I'm getting from people, email about questions, and that, you know, if you go from 8.5 to 9.5, I just think that these pivots are a little too close and widen them out a little bit. But any swing underneath here, you have to run to the hills, because I will assume that gold, because it is net long, that eventually it's to find a bottom, we're going to have to go to net short. All right. So basically what you're doing is you're playing an event again. The thing is if they do, if they don't, whatever, what does that, it's what's in the marketplace. We, on this 2-hour chart, we see that people have moved into it, which is it's a good thing here because of the range had narrowed. Okay. So over this period, what do we know? We know all the people that got in are somewhere between, we'll say 750 and 850 just to make some round numbers on here. So it's one of those that if you bulls want gold to go higher, one, you have to actually go into the metal, but two, you're going to have to, it's the bulls game to lose here. If you want to get it to swing higher here. This is a 2-hour chart. There's still more room to run. So it comes down to you're going to have to get in there and do the work yourself, kind of thing. Here you see it's up 10%. Okay, where this down here, the juniors, okay, 14%, so 40% more return on the juniors. Juniors are usually the greed side of thing. They're tiny, blah blah blah. The target here is 10. Okay, the selling on balance volume here, the selling was greater. Okay, the number of people getting out greater on the juniors, and this is interesting here too, is that more people have gotten out of the juniors than before the rally started here. So you have, in a sense, you can have bodies run into this, but like I said, you have to have you have to get into the metal side of things. Platinum looks good, silver looks good, palladium looked like a dragonfly, and gold, I looked at GLD and that the bodies are out of it, so you're going to have to run into the metals. I'm also looking for a pullback in a dollar. Like I said, some tree shaking going on this week. UWTI, like DWTI, I guess they're being redeemed, and so they're coming off. I'm going to miss them because I use in between the commitment of traders reports that come out about every week. Commitment of traders from the Commodity Futures Trading Commission basically shows the poker hands of the players, managed money, large specs, commercials, and then your small speculators on there. And I like to use this to give me an idea of where the thinking behind the bulls and the bears. Here you can see on the JNUG though, they're in there too. Okay, but this is short term on 2-hour. It just basically tells me that there's been a change in sentiment here, that they're now leaning bullish. But like I said, it's the bulls' game to lose here. They have to come back in. Anything that comes through the bottom, I just see a precipitous decline in metal prices here. Like getting back here, UWTI. The bodies are in there, and we're pressed up against where are we at? Okay, like crude, this is also weekly. At best, shoulder, head, another shoulder. I talked about 62 area up in here. Right now, the bodies are in here, not as much so is on Brent. Brent is actually higher, so technically you have a breakout. So with this and the small amount of unbalanced volume, one would assume that there's going to be a continuation higher, which will also pressure FOMC to act. Like I mentioned before in the past, they can come back not with a quarter, but with a half. So be very careful going forward here as we play the tightening game. The end result is an economy that slows, okay, and recession. I gander that we will see the bottom of commodities for the beginning of the next secular cycle after the next recession. So if gold does break below, okay, the previous levels that we're at, I would say that we're going to have a precipitous decline to the downside. Okay, oil, gold has actually been reacting to bonds and that, like I said, and the dollar. They're going hand in hand. Oil isn't. Okay, so we have a situation here where as oil moves higher, we're going to get more production put into the system. The jobs on Friday, those people have to go to work, fill up the car, yada, yada, yada. Okay, so we're back to on the consumption side of things here. Is basically how I'm kind of looking at it. I actually scored $1.97 on gasoline I'm sure it's 20 cents higher by now. You, even though the bodies are in there, you have to go along with the breakout on here. But when I look at the individual issues like UWT, they're already in there. So once again, it's the bulls you have to continue on. Like I said, after 52, here's what 55, and then 62. And then on the back end of things, that'll get interesting because like I mentioned, if gold takes out the lows, what about oil? Okay, so we'll give this a couple of days to see if there's a carryover, but there are a lot of bodies in UWTI. Where are we here? Here's the daily. So you can see on UWTI, the bodies came into it. Okay, we were rolled over, double bottom down here at 15. We were at the top of the cloud. The bodies have come rolling back into it. If you kind of look at the bigger picture here, this is UWTI coming off. Now you have a sideways pattern. So it's one of these, as if it rolls over. Okay, now you have a series of lower highs, and it could come back this way, right? And that would be what I'd be leaning for going into the next recession. But for now, on the oil side, you have to, because it broke out, you have to go along with it. Where am I? Back to here, But it's like if you're not in it now, stand aside, kind of deal. It's because I look at the risk. Where's the risk in all of this? It's moved from where are we here? It's moved from 15 to 25. So it's the same thing as like UGAS. Here are the bodies. It's on weekly. The bodies are in there, lots of volume. Same thing I talked about on Thursday with natural gas. What do we know? We know that the bodies are in here. So they're going to have to perform on here. But these are going off the board. So there'll have to be other products to play. So unfortunately. No, that weekly DGAS. Okay, here was the oversold on DGAS. You're getting a pickup in volume, so people are getting out of DGAS. But I'd like to see more of a washout on a short-term basis. Where are we here? DGAS, they're still hanging in here. Okay, so to me, it means that there's still more room to run on natural gas. You haven't cleaned them out and cleared them out. We're kind of doing the whole, second mouse thing. This was the breakout. Hey, folks, it didn't last. So it broke back in. I would assume that we'd slice back through here and then there'd be reverse split. This is where I would lean here, though, versus chasing after the metals. I would look for an area to get back into dust. Daily, yeah. Like I said, there's going to be a lot of volatility. It's one of these you can let the market come to you. You move from basically 22, 23 up to 60s. Okay, so it's at 80 coming back is 40, which is into this area. So it's one of these where you don't have to run in right away. Just wait. Let the market come to you. You want to go in when it's quiet, not when it's just chaotic. TZA, okay, this is 3 times bear. This is the opposite of TNA. Okay, so this is Russell related. Here you have the ADX coming off of a high and hooking lower, which basically means at best TZA is the trend is sideways to up. Okay, because basically this told you that TZA was entering a trend and the trend was lower here. Let's see it. Okay. You have the NASDAQ, I believe if I go back to, let's see here, where's the beginning? Okay, not the comp. Well, I guess I can run through these here. So here's the NASDAQ comp. Okay, on the weekly, it poked its head through a hard reversal here. One of those where you have to have some follow through to the downside. Now, what I've done here is I've pointed out an area here if by chance this is the breakout failed. Okay, and the NASDAQ composite, the bodies are in there. See, the bodies are in there. Basically haven't had an oversold situation in 3 years. Okay, so if this breaks, what we know is usually it comes back through the breakout. This is a secondary breakout. You have your breakout again, a little deep on the pullback. The swing, that was all it could muster with catching the stops and the shorts. This is all they could get, and it's reversal. Comes back in, I assume it's going to blast through the other side of it. And so we're looking at a 22% drop from the high just down to the previous lows. There would be a pause in this area at 4,800, okay, where you're already talking, you know, a 10, 11% move here. Nothing really goes straight down. In bull markets, they open lower and close higher. In bear markets, they open higher and close lower. So this is what I'm talking about with volatility picking up. For the bulls, they'd have to get it back. What is that? Let's say 43 or 53.40 on the NASDAQ. And I'd look at that basically as a retest. But like I said, we'll know more come Monday, Tuesday. These are weekly. Okay. So, you know, it's before you know it. Okay. Have, you know, sharp trend lines here. Here's one trend line and another trend line. But, you know, before you know it, all of a sudden everything slides. You just have to hit the button. The bodies are there. We were looking for the put call ratio and some of the other indicators that I put up there that we did. Yeah, we saw a bounce, but we're not getting a broad-based rally. We're basically narrowing. You know, you have the NASDAQ here rolling over. The industrials are holding up, but you have kind of a doji, shooting star, something to that degree. So if the Dow reverses here, the bodies are in here also, you'd have to treat this as a retest at 18,750. Okay, at best for the bulls. All right. The deal is it has its momentum. You know, this is just 30 stocks. It's the same thing. And you know, it's really easy to say that the Dow's at a new all-time high, but you fail to mention that you're getting a reversal at the NASDAQ. It's kind of like if you're listening to AM radio, they don't list all four of them. They list one. You know, the Dow's up this today. So you have with the Dow and let's see here. Here's the NASDAQ 100. This would be the Qs I was looking for on Friday. Some sort of a move higher to try and buy some puts on here, or add to the marketplace. I did look through, where was it here? Presidents. Okay, quick tangent. Okay, Obama's second term. I was looking for when folks come in to the market, they're elected. Here's Bush's first term, and this is what he had to deal with. Okay. Clinton's second term ran up to it, similar to what we have going on. Clinton, he had the business cycle because we were coming out of a recession with George Bush. Basically, 89, 90, 91. 1987 was the peak in real estate, and this was the Gulf War. Okay. Reagan's second term, this was the crash. This is when the baby boomers coming through in their big money-making years, IRAs, things of that nature. This is when I was turned on to stocks, or basically of leading a life of being in the financial area. Was basically because I started out trying to figure out why you would, you know, you're young, you know, how much does the market do a year? 6-8%. But you know, all of a sudden you go to the charts and, you know, options say this and futures say that. You're like, well, but if you know, it's a coin flip for all of them, right? The key to it is staying power, you know, hang on, and that. Reagan's first term, he came in, but we were choking off the economy with higher interest rates. Then it took off. Or was it here on 1,000? It took 15 years to eclipse 1,000. Okay. Carter, I'd mentioned Clinton or Donald Trump as maybe being a one-termer. If the recession is into 2020, just like with George Bush, Herbert Walker Bush, you're one and done. Okay, so Carter walked into this here. The market went for basically 1,000, lost 25%. And then he had to deal with the interest rates. So people vote with their pocketbook mainly, and he was one and out. But what I was looking for was something where you mark a high for the year. You know, here was the high for the year. You know, what do we have? November, December, and then basically it came the whole year and a loss of 25%. So that's what I'm looking for right now, because we're at the highs again. We're getting, you know, we kind of lost the NASDAQ stocks for right now. They're moving over to little stocks, so it's beginning to smell like the late 90s again. All we're missing is the insanity. This is under Nixon's first term, or second term. Same thing again, started off on here. We did have the oil crisis and things of that nature, so that was a macroeconomic. Here was, we had the election and came in, and basically this was a drop of a third on here. Okay. The other ones with Johnson and things of that nature, they were all uptrends. All uptrends, all uptrends, all uptrends, all uptrends. Same thing all the way back. They were all uptrends here. Okay, Roosevelt's second term. This was because in 1937, we raised interest rates once, and then we actually had to drop it. And stocks here went from, 190. The Dow went from 190 to about 100 on here. So they basically lost half, and in a relatively quick period. You're going to have a lot of people remembering the Depression and what happened, and that's why you have this. It's pretty much a shock, and then you have entering of World War II. This was the bottom, 1933. This was the bottom of commodities. Silver got to, I believe, 35 cents an ounce, and this was the whole momentum low on all of it. And the market continued higher until 1937, and then it collapsed. And this was the unfortunate side of 10-to-1 leverage for people going into the equity markets. All right, Roosevelt's first term. Okay. All right, getting back on track. All right, so where are we here? Okay, so back on DGAS. All right, so we had a low here. We had a momentum high. There's still bodies that need to come out of it. That's why I'm still leaning for. We have another week for the cyclical high in natty gas. I assume since we had a good 15, 17 cent, 18 cent, whatever, drop from the high on Friday so far. Just a little bit more would help to shake out some of the folks that recently got in on Thursday. That, putting on my trader jacket again, going to the floor, find the pain. Where do I know where the pain is? The pain's underneath Thursday's trade. Like it's on dust here, same thing. It can come out on here. You had a pretty good move. You basically had, we'll call it a triple, double, triple, whatever. That would be what I'd be looking for. Any type of shakeout, shaking the tree type of thing, I'd be looking for, to enter that, because I just think going forward, you're going to run into a recession. You're still going to deal with a stronger dollar and interest rates and things of that nature. We're just going to get some tree shaking going on. Same thing here. You had a low. We had 26, went to 33. It's about a third move, and then you double bottomed again, and prices are low. And on a weekly. So here you have engulfing bar here. Volume came in here. You see it in a few different other places too, because you get the breakout of the Russell and the Dow, and the S&P kind of flops around up there, but they just couldn't pull the NASDAQ with. So it's to me, it's, we're long in the tooth, changing of the guard in the White House, different things developed. I believe interest rates there at their low, and we're only going to head higher for the next 30 years on real estate or in interest rates. As you can see here, there's more room to run on UGAS, but we know that the bodies are in there from just on the daily. I lean towards supporting this, but where are we at? DGAS, okay, dust, TZA daily. You can see it. Just they finally gave up. All the bears finally gave up on here. That's how I look at it. UGAS. Okay, so UGAS. Heck of a move, right? And this is a daily, right? Yeah, heck of a move on it. Just a sharp move. Not a lot of people jumped on board. Okay, so it won't take much to clean out, who's in here. I now mentioned around, here you have your cloud, use it as resistance. Have to support 30 area in that. Okay, for as the bulls, I have to speak of that we're in a multi-year bull market, and natty gas is kind of how I look at it. My one downside is that this is just ending up to be one long sideways pattern, because you do have the bodies that moved in on Thursday. You run into that actually marks the high for a December high, and now we go the other direction. But like I said, we'll know more Sunday and Monday. If it cracks this high, then I gotta believe we're off to the races, just due to the fact that the bodies aren't in there. Okay, there's going to be a lot more talk. I'd get nervous though when they start bringing out bigger numbers. I'd cap natural gas. For right now at what, $3.84 for a round number, and $4.20 on the downside on natural gas. What did we have here? It's deep. We're talking 20-30 cents here, just to support this area. Okay, because that'll allow people to get back in on this here. But like I said, we'll know more the next couple of days. Same thing here when we're talking about oil at the breakup here area. They're getting out of DWTI. Okay, so it tells me that they like the side of oil. I am noticing a lot of that in individual oil issues, and so that's why there's kind of a pause. People just got in recently. LABD, me personally, it's one of those I'd pass. It looks more like a sideways trade. It's just kind of stuck sideways. It's basically how I'd look at it. JDST, actually, we looked at that. We need to go back to this one. Okay, so UGAS, same thing. Like I said, a larger sideways pattern is basically going on. You need to clear that 388 level, I think it is, on that point and figure chart to actually crack the downtrend. That's a nice thing about point and figure, is that it's mechanical. It has certain rules to follow. LABD, possibility of a stall here at the 50%. There is still more room to run, but these things, the bios and all that, they've come off. Seasonally, they go higher into January, but all of these have come off. I mean, it's been years since the high on that. So what I'm getting at is there's not much more room percentage-wise to move. If you want to use the term decay or whatever, that's what you have going on, and it ends up just being a bunch of sideways. DWTI, you can see that they've come off. So it's one of those where it's like, okay, the bears finally gave up. The bulls, they're trying to break this out, but they're in there too. So it's like, you have to wait to see if they can actually hold it. Like I said, anything on a pullback, I'd be interested in. The short side of gold. Here it held the cloud and rolling over, but as you can see, it's a larger sideways pattern. Because I'm looking for something like, say, where the money has been going into and all of a sudden it stalls. Okay, I talked about banking, I believe. Where am I at? Okay, banking. All right. I think it's the first chart. Well, that's on my first chart. Oh, they don't have numbers. All right, what I'm looking for here is housing starts. New home sold. Whoops. Bugger. Click next one over. Okay, so what I have going on here is, okay, this is, or not housing starts, this is home sales. Okay, I marked areas from lows to high. Arrow here is a cycle high, 18-year cycle in real estate. The circle here was the cycle bottom, okay. 9 years after the peak, cycle bottom. Okay, so here's the two cycle bottom, comes up into the late 90s and pauses. So here I'm at going, well, you have 133% change, 149, 160, 136. So maybe new homes, and we're running into FOMCs. We're going to pause here, okay? But during that time period, what happened in the late 1990s? Well, the money moved into the smaller stocks, and that was the angle that I talked about for a while now, growth in the little guys. That would be, if we get some sort of pullback, that's where you'd want to go into. It's kind of like this, Amazon, is it going to double from here in the next, where are we at, 3 years compared to all the little ones? Stronger dollar means that we're going to have, the growth is going to have to come domestically. So if there is a pause, the money's going to have to go somewhere. Okay, you still had home buying in that, you still had activity, but you didn't have the growth here and the number of people who were chasing after and buying homes. And remember, it's besides food, water, and shelter, homes are also speculation. So I'm kind of leaning towards that. Here we are in the middle of the meat here that we see just kind of sideways action in homes, and the money ends up going into the smaller cap stocks here. I talked about, okay, so with the home, all right, you have your financial bull, interest rates go higher, their margins are great, but they still have to put out the loans for the homes. So you may have a deal here where there's a pause in your financials also. They've had a pretty good run. It's one of those that, people want to get on board, where they're at. The whole thing too is between now and FOMC, you could have anything and change the tune, but basically what we're seeing in the marketplace is that interest rates have already moved. The Fed just needs to catch up kind of game here. But like I said, going forward, that's the key to this whole thing, is to cool down the economy, and you cool it down too much and it rolls over. But that's not the high in real estate. But you will see people come back in then and buy real estate as interest rates come off. Here's the bears. Okay, so you have unbalanced volume here. The bodies are out of it. You basically have somewhat of a, it's not really an engulfing, but it's telling me the sentiment of, what's, where they're at, like here's the Russell. The bodies have moved in here. They went along with it. There's been a move for a while since the beginning of the year. We can just call this a double top up in here. You have to watch for, a reversal if it comes back in. And these are, of course, the ones that I want to be buying into on any type of decent correction here. They are that's the growth in that's what you're looking for going forward. But the bodies are in here, so we have basically engulfed the previous week. So once again, it's the Bulls' game to lose. At best, they can do is sideways, but they have to hold on to it here, or you face that price comes back in and then it declines, which is of course what I was looking for, is that something in the beginning of the year, because things are going to change. E or Y, energy bear. Like I said with the oil, okay, right? So the bodies have come out of this. It's a pretty fat bar. It kind of goes, well, maybe 52 will cap oil here unless we have some sort of geopolitical deal. And then that would definitely cause the Fed to sphincter up a little bit here. But this is, you know, the oil chart looks good. You know, the money is coming in. The Brent is trading above. But all of a sudden you get where the bears begin to give up here. So right now, short term, I'm a little cautious, even though oil is breaking out, a little cautious on it short term. Emerging market bear, okay. This one I mentioned that to me, it looks like a bull flag and heading higher. I mentioned if you go against the dollar, the emerging market ones. One thing I thought was interesting was the Mexican peso. They also have oil. And the peso last week got weaker, so I thought that was something. That was the living creature. If it's not, if something's not working, what we would assume would be logic, then there's something up there. It's kind of like something that I'm missing. If oil's stronger, you assume then oil related. You saw that on the Norwegian kroner. But you didn't see it in Mexico, and Mexico has oil. We get most of our oil from Canada, and you saw that with the Canadian dollar getting stronger. It did hold up, though, with it came under pressure. U.S. dollar, Canada went higher when oil went higher for I believe a couple of days, which I thought was interesting here. Those are, to me, it's kind of like a gift. One would assume that if oil's higher, the Canadian dollar would be higher, and I think Friday it finally reacted to logic. The whole emerging market interest rates are higher in the United States. Oil prices are higher. Their costs are going up. To me, this looks like a bull flag on here. There is some more room to run on here, but that's I'm treating it as a bull flag for those of you that are in this. ERX. I wonder if they're going to, they need an underline like OC, what's it, OC, or what is it, SCO and things of that nature for oil. Energy bulls, they've been basically holding in on here. I talked some weeks back about people hiding out in oil. I noticed that in London, a lot of the British oil companies were holding, when oil went zipped back and forth, the piano key thing for up down for I think 4 days. The oil stocks were holding in on that. I think it was 2 Fridays back I talked about that. So they may be hiding in here for dividend related. If the economy is expanding, we'll be consuming more energy, blah blah blah. It just for me here is that in this case, obviously the trend has still been moving up here. If oil does break through, then the angle of ascent here would increase, and this is a logged chart, so this is a pretty hefty move here. You have 28 to, where'd we close? What's a high 40 in a couple of weeks here? So what's that, 60-80% move in a few weeks? So your angle of ascent here is increasing something fierce. So to me, I look at that as somewhat of a caution. They're really excited about this. So it's in my eyes, it's like if you're not in it, just kind of stand aside. TMV, this is on the bear, but on the daily, you can see, where are we at here? What am I looking for? I'm looking for TNA. SPX, CRX. Okay, here we'll go. Okay, the energy bull. The weeklies are nice, but I prefer the dailies. And then, sometimes it's difficult. You'll get a signal in the 2-hour, but it's not on the daily and the weekly. It's, they're all not lining up. But a lot of us are, playing intraday. Here you have, we're moved higher, opened at the high and traded lower. We saw that with Natty Gas. And then, so to me, it's kind of like, I'd say we'd see 35 before, say, 42, even though there's more room to run. Just this opening at the high told me that things were getting kind of frothy short term, because you do have your breakout. This was the pre-OPEC deal, the sharp run. I mean, a lot of these sharp moves like this remind me of the Russell, and I treat it as short covering. So you end up with one of these things that all of a sudden, if it was short covering, this thing would swoon. All right, because you ran out of all the buyers. Now everybody who bought in on this, we saw the bodies moving on oil and the breakout and the Brent, all of a sudden they have to get out and you go the other way. Okay, and then you end up with a lot, once you have a lot of volatility, then you end up going sideways. And to me, it's kind of a short-term deal here. We're opening at the high, coming at the close. You could go about 50%. Anything under here, then there's a possibility of a larger failure. Same thing here, I believe, on the fast. The bodies are in here, right? This is the daily. The bodies are in here in the financials. The financials, that was, we're in the home building. We're in the markup phase of homes and that for right now. You had your breakout, but like I pointed out, is what happens if that growth that we saw in home sales stalls. I'm seeing homes and stuff around here seasonally selling, but their numbers are goofy, like 336, 217. What happened to 229.5 or 239, 249.5, that kind of thing. 336, 317. What's that all about? But that's that's how that works, finding the value. But if you do have a pause in the homes, it's that time of the year too. I could see a pullback here in the banks. A lot of them individually have become frothy. Like everything else, I think Bank of America does business with half the country. It technically should be broken up. It's against the law. And eventually, what they'll do is they'll start breaking up corporations to help the stock market along. Usually helps out. Instead of moving one stock X amount, you can move two of them, and it just helps. It's kind of like when they broke up Standard Oil. Here, Labu, you're coming off of a hard sell-off from the highs. It just becomes one of these trading type vehicles, but all of a sudden your range begins to narrow. I mean, 24 to 49, and all of a sudden you get back into this area, and it's chopping back and forth. These are biotechs, but I talked about staples like Coca-Cola and that, and defensive stocks, like Johnson & Johnson, but that's coming off of a high and pretty decent rollover. You're going to need places to hide out. Well, now we're back to, maybe I should buy some debt, hide out in debt for a while. And especially if you get, the sharp short covering rallies. It takes 3 years basically to run an economy into the ground. And if they started in 15, it'll take until 18. So it's never a straight move. So if people do hide out in debt, you look at it as, is it a quarter or two? And then we just a quarter or two in debt would put us back into the summer home selling, right? And if they buy debt, interest rates would come down. What a perfect time. Here's June. Let's, we're going to raise rates again, okay. And then they come running into it, and you get that, rush into it, which of course is going to be economic. And that's going to, okay, well, the economy's taking off. We better raise rates. And that's how you kind of look at it. It's not really a trend change. It's just a place to hide out for a couple of quarters. EDZ, like I said, I think it's a bull flag hitting higher. The ERY, which is, the bodies are coming out of this. One of these where you could have a V-type bottom on here if you get a reversal in the oil. Like everything else, we'll know more in a day or two if oil can handle the breakout. But it has moved. My concern, of course, is that it goes the other way. that it vacuums the other way. There, and then, like I said, the volatility. Yen, which is the bull in the China, we got up to the cloud and we're rolling over here. And Yang was the one for the bear side of this one here too. You have, momentum up, you traded lower, you basically retested, same type of deal. The strong dollar, currencies, change of regime, saber rattling, some defense guys called Mad Dog. It's typical playbook, right? So, yay, Mad Dog. All right. TMV, same thing here. This is what I wanted to point out is you had the high here, or you opened at the high, traded higher, and then closed lower. And this is that, like they talk about hidden divergence and things of that nature. You have where it actually, you have a green bar because it closed higher. Okay, price, this is where it closed. But you have an incident here where more of the trade is above where it closed. I mean, it literally almost closed at the low. The following day, here was your open. Prices came down. They came into it. I can see this coming back down to say into the low 20s. This one moves as interest rates go higher. So this was kind of a sign to me that we may have a pause here where people run into debt and come out of equities. And then the dollar comes off too. And then we're back to, okay, so there's your bounce, the dollar comes off, there's your bounce in gold, because gold's been under the treasury and the dollar thumb, but oil, a little bit different. So, and the move in oil, look, if I was an oil producer, I'd be hedging, right? I mean, just earlier in the year, you were, oil was nearly half, right? Is that about right? March 26, and so oil doubled. Yeah, I'd just be putting on some future hedges. You're going to have to survive, if that's what we're doing. We're trying to raise interest rates to run the economy into the ground, hedge. You have to survive until the next time we get the secular cycle. Here's what's this? This is the S&P long. Okay, so it broke out, came back, treated as a retest of the breakout. So you have to give this a couple of days. The S&P, they've basically been long. They did cut back a little bit here, but they're back at where they were before. So this tells me that the underlying bias is bullish on here. But you have your little dots. It's one of those where if it breaks the dots, the computers are going to kick in, and all of a sudden you're going to have ... over the top on here. Like I said before, all these horizontal levels, I mean, if it loses 96, 96, 97, if it loses this area here, all of a sudden now you're taking out half. We saw that already with the NASDAQ, where it's taken out the post-election thrill. It loses half on here. I don't think this will hold. I really don't think this will hold. I think we'll go back and test down in here. So all of a sudden you're talking, a half drop on here. It's because you're looking at, remember, look at a longer picture here of going up from 08, 09 all the way. You've gone up for 7 years. You keep pumping and pumping, but now we're raising rates to pull money out of the system. You're going to, the free money is gone. You did all the buybacks you could. If you want to do the buyback thing again, you're going to have to use your, there's just the macroeconomic issues here. So it's one of those where, like I said, on the post-Brexit move, the last 10% you're on your own, because it's one of these where we're every day that goes by, we're closer and closer to a recession. Let me go back into this one here. Okay, here was one drip. All right. That was part of the oil thing here too. S&P exploration in that. Okay, drip. Tons and tons of bodies got out of it. Okay, so what do you know? You know that the bodies aren't in this. So that was part of with the whole oil deal of the individual issues, Marathon Oil, things of that nature, where you kind of look at it as, well, is this a breakout to like 55 to 62, or is this a last hurrah? and then oil rolls over. I mean, as badly as OPEC and everyone, they want higher prices. They got it. What are they going to do? They're going to pump. And that's why I talked about, if everybody, I mean, who does it affect? It just affects the underline of the players, and you have X amount of countries in OPEC. You have to get them all to agree. You got a hell of a run, and that's exactly what you want to hedge forward until the next recession. I think you can go 20 years plus out in oil. So, I mean, are we going to remember this, down the road? I don't know. We usually don't. Once the weekend comes, you forget about what you played the week before. But this was just one of those signs here. I'm like, well, what do we know? We know that all the bears finally gave up on oil here. And we're only talking, what do we have? Here's the beginning of the year. So, 241, I'm going to guess that there were some splits in here. 241 at the beginning of the year. And so now we're down to what, 12? Well, we're back to dollars and donuts here. Let's take a look here. Daily and drip, decent amount, 12. They're oversold. And here's the bodies. Okay, so open lower and higher, 20, $8. Okay, so see, it's one of those that. Oh, that's so tempting. Whoops. Why didn't you? 2 years. Hold on a second. Why didn't you do that? All right. So drip on here. Okay. So the bodies came out of it. All right. This would be one decent volume. It's only 1 million, but it'll work. You can see that the bodies came out of it. Let's swing up here to 16 to 18, or excuse me, 12 to 16. Into this area. To me, my attention is that the people got out of it, and you're getting some bottom fishers here. So this one looks like a decent. You're back to rolling the dice thing here, where you say if you buy the break at it, say if you buy at 13, your stop is down at. Oh, I guess you could go down to 11 and a half, 11. That kind of thing. So you have. What do we have here? 13, and when I say 16, so there's $3 on the upside, and your risk, it's really not 2, because you're talking 11, you're down here. Comes to be one of these where you're like, okay, I bought the first dip, I bought the second dip, I made the third dip. So of course that's going to take some time, okay, but just by what you saw with the daily chart, the bodies came out of it. The bears finally gave up on this thing. So I'd be tempted to, go the other way on this one here. Take the long side of drip. Okay, beep do 10-year wide drip, drip. So that was drip. Okay, on a weekly. That's an attention grabber. What do you know? The bodies got out of it. There it's been a long, they finally gave up. So this is a sign, these are little signs to me that, okay, now, you're going against the grain here, but that's how it works though sometimes as a contrarian. See, the whole oil thing, I talked about that earlier in the year. And here we're at where, oil's had a pretty good run. We're working, I talked, 2-3 weeks ago about screaming to 52. That's going to get FOMC's attention. And here we are at 52. They bailed out of the short. So it's like, well, okay. The tempting, and then this would be one of those two. They don't have options, but this would be one where, who's looking for oil to go the other way. Okay. The only thing that would ruin this, of course, is probably a geopolitical type deal where, because basically a lot of what we had was just talk. there are forward sales. When do they start cutting down on the oil? I mean, it's one of these, the best news possible came at, if they were going to cut it, wouldn't they talk about cutting it at 28, 26? If they're cutting it at 52, from 44 to 52, that's almost the best news possible for oil bulls. So, it's kind of like Captain Obvious at the end of a move. Here's where we're going to put the nail in the coffin, or whatever the opposite of putting the nail in the coffin is. Here's FAS on a weekly. Okay, this is, like I said, the financials and the housing. They got out of this thing. This is S2. All right, so here you have a situation where, if you go into FAS, it's at 24. Even if you get up to here, it's 28, so that's a 20% move. So you're basically looking at it as you're going against the grain. But it's one of these things where it's giving me the opportunity. We've seen a pretty good move in banking and banking-related stocks, but where were you when Bank of America was at 5? Now you're into it. We raise interest rate. Looks like we're going to probably jam housing. The stocks look a little toppy. Maybe we run into, so also the margins come back, right? If you run into debt and interest rates come down, well, that's going to, we're going to raise interest rates. Yeah, but the marketplace is going the other direction. So now it's narrowing their margins. So it's not that there's going to be a trend change. It's just that the market is susceptible to a counter move here. And like everything else, it's all, it's never straight down. There's always, like here with silver, right? Silver's on its way to $5 to $8 kind of thing, right? It's on its way down, and you get this pattern out of it. I marked this up because of when we talked about NUG and JDX and the bullish side. I didn't see it coming into the metals. We are oversold, so it is susceptible to a move higher. But they'd have to move into the metals. Buying the equities doesn't move the underlying. It just it helps the corporations stay alive a little bit longer as prices are becoming depressed. So you're going to have to come in and move the metal, not as much as moving the equities. You're yin and yang again here. See, I hate when that happens. Here's the yen, and you had your oversold and you're getting a bounce. But when we looked at the daily, it was ran up to the cloud and came over. This is the emerging markets bull. It looks like a bear flag here. It's going to head lower. SOX S. Okay, I talked about this before. The technology side of things, it's getting pretty well beat up here. I think I started early on this one around 15, pointing out the getting to be oversold. The deal is the tide raises all ships. It's the same thing too. If you go, I talked about, I think, Microsoft and Intel. Even Intel wasn't being helped with what was that, SMH, a semiconductor index. Like a lot of these, I mean, boom, opens at the low, lots of volume. It's almost feeling like a reversal pattern here. On this one, you basically go after the other targets, but if it does, it would be, if this does hold, you're going to get a runner. You're going to get it's going to move quickly here. And that's, like I said, talking about volatility. So on the Russ, it talked about that, coming in, the buy here is down at the 9s. I think we're an 8. Okay, so we're $1 off here. Over the bodies have gotten out of here, but this is going back to the oil thing too, where all of a sudden it's like, well, now what happens if oil starts coming off to 48, 47? From where we're at 50. It starts with, it's just profit taking, and then before you know it, it's moved a few dollars more. And that's, here you are where U.S. equities move into the highs, but it's kind of fractured. And then Russia, finally moved, it's got its move in oil and natural gas. And then the bears finally gave up on this thing. So you're going to, you could end up with full trend reversals here with the volatility. So, make your plan, ahead of time. Like here, SPXL, you're getting a breakout, you're at 2 weeks of it. And then you have to treat it as this is just a retest. But if it continues on, now you have, well, I'm going to assume that this isn't going to hold. They'll try and hold it here, halfway through it, but it just looks like it would want to fall, lower. And that's all it takes. It's just, a couple more weeks of this. Then all of a sudden, these are numbers from this year's data of targets. For where we moved, here's the pivot for this year that came from the data of last year. We using the previous year's numbers. It stalled right here on R1, broke out, came back. We'll call this retest, and the swing would be up to here if it follows through. But there are bodies in there. The longs are in there. You're going to need new people to come in and push this thing higher. Treasury bull, same thing here. You get your momentum low, the previous low on here. Like I said, maybe a bounce higher, but overall in general. And you can see, I guess if you use the same type of pattern, right? What do we have? We have a breakout or retest 2 weeks up, right? Weekly, yeah, 2 weeks up. And then the rest of the time it was over with. So here you get your breakout a couple of weeks, you pull back, if you come back down, then you roll over again. And that was in the L. This is it's not that, I'm trying to pick the top. It's pointing out that, you have an election, you feel good, stocks run, and then they stall. And then the NASDAQ is not following along. So you have just a big shift in, economically where we're at. You're coming out of the Obama administration and you're moving into the Trump administration. It's a good thing that we have a builder guy, because we're in the builder cycle, and it works. What do they call it? You can't change the stripes on the zebra or something. But you also have a deal here where we're coming off of a larger cycle low of interest rates, and we're now going to go and spend 30 years going higher in interest rates. So it might not end well here. He may be a one-termer. So that's here nor there. I'm a nationalist. I love the country, but I love Earth even more. So, all right, we don't have anywhere else to go. All right, so TMF here. So it's not as much as, okay, let's buy it at, what's that, 18, and then ride it up to 22. If you want to play that game, that's fine. My deal is I'm looking for, okay, once you get to the other way, your short's going the other way is what I'm looking for. Like when I write it, talk about, well, I'm not a big fan of going against the trend, because you don't know how long it's going to last. And if it does, it could be overnight. You could have something where bonds rally, 3 to 5 points, and then just crater for whatever reason. China comes in and says, we're selling them. We really don't like your Trump guy. We just, it's one of those things we just can't get along. I think we did the Taiwan thing. We play our games, they play their games. Here's the yang, right? The bear. So weekly. Okay, so you have your little cross thing going on here. So, I'd be tempted to go into yang again. The stronger dollar, okay, right? Stronger dollars will help for imports going forward. No matter whatever they say, strong dollar, we're going to buy more imports. That's just how it goes. If we're all in it for ourselves, it's going to be cheaper to buy it abroad, and Toblerones, all those foreign goodies. That's what I like when the dollar's strong. Ooh, that's what I need, right? Whole bunch of Swiss chocolates sent to Kevin in August into Arizona. Yeah, dry ice. Okay. All right. So the deal here is that eventually we'll start buying abroad in mass quantities like we did in the 80s, which helped out the Japanese. it's one of these things that you know, you get the little cross guy here, and it's not as much as that you know, on a macro level. Yeah, we still buy stuff from China, and that it's that all of a sudden our market rolls over, and Britain's market rolls over, and Germany's market rolls over, and Japan's market rolls over, and it's kind of a national thing. I'll do a video on other indexes, but the global ones. We're all in this thing together, right? We're all on Earth, so it's not that on the macro level things are getting soft. It's just that we're all, for whatever reason, whatever we blame a pullback on, or you know, however we say that equities continue higher, we're all in this together. And here's U Gold, 3 million on here. You know, you have an oversold at 10, goes up, this is pretty quick, a few weeks here. On balance volume moved in here. We're back down to this. So it's one of these things, again, like I said, you have to go in and you have to go and move the metal yourself. BRZU, okay, here's Brazil. BZQ was the bearish one. You have the rollover coming in here. You know, you break through here 25, this thing's going to slide. The bodies are going to come out of it. Okay, like I said, that they're going to, you know, Brazil's going to have issues with, you know, say fuel costs and things of that nature. Lower commodity prices. You know, if commodity prices roll over, sugar, all of it, orange juice, all of a sudden their things aren't so rosy there too. SOXL, this is a semiconductor long. These are weekly. So you had a breakout of 2 weeks and, you know, boom. A lot of bodies in there. So to me, if you get some sort of bear flag up here, you'd probably want to get out of it, and just due to the fact that you're going to have people that are like, wow, it went from 57, you know, I lost, you know, $10, you know, kind of thing. Did it get to 47, 46 and a half? Close enough. All right, $11 in 1 week. That wakes people up here. Yes, it did it here. It took out a lot of it, and you had the continuation and stuff. But back then, you still had room to run on it. Now the bodies are in here. You know, can you imagine how the Nasdaq's going to handle if this thing goes from 60 to 40 in 2 weeks? You know, that's things are going to wake up on the other side of equities too. Other markets that haven't participated in the rollover yet. This real estate one, bull, looks like a bear flag lower. This would probably be one to buy here. On this one, looks like it's going to be a leader here. It's already telling you that it's not happy. I would say that this would probably be a leader here. I don't know, set an alarm at 11, 13 and 11. I'm not a big fan of that one. I'd rather go after the home builders. Here's the Russia, right? Russia pokes its nose through on here. It's up here. The bodies are in here. You know, it's from 24 to 70. So, I mean, we're talking, you know, this is what I'm looking for here. You have your breakout, you have to follow on. You know, if you get an engulfing bar here, this may be a couple of weeks of breakout, and then that's the end of it. You know, we're beginning to see that. Here's GUSH. Okay, here's the positive side of drip. All right, so, you know, all the way down. What do you see? One fat bar. What do you know? There's a whole bunch of bodies in here. Okay, so what's that? 100, losing 100, 109. You know, it has to drop 10% to take out the breakout area here. Let me take a look at this one on a daily basis and a 2 hour. Yeah, opened at the high, came down. That's a pretty good reversal bar there. Opening at the high. There's a lot of people that basically, in my eyes, got caught, and then they panicked that last day, and they just hit the button on the open, get me out. Amateurs control the open, and the pros control the close. Basically, they came running in here. This reminds me of like the Palm IPO, opened at the top and never looked back. All right, so okay, reversal Soxel. All that one. So like I said, there's a lot of bodies in there. Even though oil does look like it wants to break out and poke higher, the bodies are in here. You do want to see, volume on a breakout. So you want to see continuation on here, but it is susceptible to a reversal. So you have to be careful, on the oil side of things here. Down on the silver, you have the bodies in here, so you can see kind of like a rollover going on here. I'll lean that way, just because, like I said, I don't think it's a trend reversal. I just think it's a pullback in a bear market. There's just enough news, just enough, we just shake the tree is basically what I'm looking for. Here's a technology bull. Okay, this is like your NASDAQ 100 type deal. We had the breakout weekly, right? Yeah, we beat weekly, came down, reversed, came down again, 1, 2, 3 weeks up, tried again, reversed. It's susceptible to a hard sell-off here. It's not at the high on here, but it's just, there's enough to go on here that that you're going to get a reversal of the trend here. So that's why I'm saying that there's going to be a pickup in volatility. You could see, oil collapse, dollar come down, gold shoots up, and it may only be for, hours to days. I don't think any of these trends are going to persist on a longer basis. Here, same thing here. It's, like I talk about short, sharp, and quick, boom. This was it. 1 week bear market rally and it rolls back over. Okay, so this one still has more room to run to the downside with the bodies coming out of it. Here's the FTSE. Okay, so here, came off the bottom down here, and all of a sudden now you're working on some sort of bull flag on the short side of the FTSE. So if the FTSE cracks, and then the, say the S&P cracks, and then the Dow cracks, things with the Russell, the Russell may hold on a little bit longer, just due to the fact that money has to go somewhere. But I just assume we're going to hide out in debt for a few months here. There's the short side of this one. I think I talked about it at 19 or whatever. Oversold on a weekly basis. We may be getting something here, right? Like I said, I was looking for something after the Brexit. Things were getting frothy. Basically, what we had was a running correction behind the scenes. It's kind of like when I talk about, if you have a plan and you implement your plan and you get X amount, don't move on. You had a plan, and that's my plan of, okay, I don't like what I'm seeing. Here's the bounce off of the consolidate or the rolling correction, all the little pink dots, and here's the bounce. And what do we have? Well, now it's even worse for the NASDAQ. The S&P pulled back in, and then all you have now is the Dow and the Russell. And the Dow, of course, is just 30 stocks. Here's GasX. Okay, this is natural gas related bear. Okay, so what happens here? You have all the bears, they basically finally gave up. And that was kind of a part of the whole deal with Thursday about taking some profits off with natural gas. The deal is you can always get back in if this thing decides to just take off and go straight up. But like I said before, I walk a fine line. One, I know some of you individually, can you stomach it? Are you going to sit in front of your computer and watch, your UGAS go from 40 to 30 and hold on? So it's a toughie. That's what I like about options, is you can write options against your position for some things, and it gives you a little bit of staying power. If you need to hold on. But like I said before, there's still a lot of room on the upside. It may take 2 years. What are the odds that Thursday was it for natty gas, and it goes down until April, May, June, July, August, that kind of thing? What are the odds there? I could say it's 10%. So there's, you don't want to be too bullish. Obviously, the bears, they kind of gave in the towel here on this GASX. I don't know what's in it. I did start thumbing through, but here you have where, they finally gave up. They brought this one back, reverse splits and all. But like I said, I use a lot of these for sentiment indicator. What do I know? We saw a lot of bodies get into natural gas on Thursday with the bar, so they're there. So if I put my jacket on, I want to apply some pressure in natural gas on Sunday, Monday. Bull in India, kind of going the wrong direction here. Okay, India bull. This one actually started dropping off ahead of time. But India is coming down. We're back to 1 billion people on the planet type of deal with India and China. What do we get? 7.4 billion people. So short term, it did get the bounce here, but not much follow through. They didn't. This is one of those that they don't want it. Here's the downside on gold. Okay, so you see that it moved up. We're into the cloud area here. The bodies are in here. It's the individual metal. So for me, I'd be looking for some sort of pullback, and then, because I do think as we go down the road that gold will continue to drop under 1,000. It's just how it goes with the whole macroeconomic cycle. Europe bull, strong reversal with Brexit, the reactionary bounce, and now it's rolling over. Okay, so it's not just us in America; it's other places too. Breakout here in like you got a couple of weeks here in the mids, and then you basically have an inside. The bodies are in here, so this is susceptible. I think it's MIDZ is the other side of it, of the coin here. So you have a breakout, it fails. This is going to be a failure of a larger move. This is the failure of the last. Under all of Obama. Okay, here we go. What do we got? 23. Okay, so 23 to 38. What's this one? 34. Halfway up is 26. Okay, so here, if it holds on, I'd be tempted to come into here. Not a lot of volume. Make sure you read your prospectuses on it here. But it's one of these at one, here's pivot, S1, S2. Sitting at S2, basically have an inside day. You just need a reversal on here. This would be another one of those that you buy into and close your eyes. These are weeks, so it's, what do we have? This is a couple of months. You get into it a couple of months. This is basically the whole year it's come down. Okay, so if you buy it, if I say, okay, it's going to go from 24 to 42, can you hold on for, into April or May, that kind of thing. That's the whole deal. If you snag one, just hold on tight. The flip side is this would be your stop down here, but it's one of those that, you're looking for an opportunity. This is the kind of the second mouse thing. Here was the bottom. It was your bounce. It came down. I'd assume it would swing into what's this level here? 40 area. So here you have one with the MIDZ going from, say, 24 to the 40 area. Okay. Okay, so here's 7 and 10 year, 3 times bear. Came up, a lot of volume. So what you're looking for here is you're looking for any pullback to add to it. Add to your longs, because we will continue to raise rates going down the road. Retail, okay, this one didn't pan out with a darn, but look at this here. You have a lot more people moved into this thing anticipating. This is classic psychology right here. You have the swing into the holiday season. How can it go wrong? Just ask the people who are long Amazon. Okay, in theory, all right. Retail usually bottoms in August, okay, because February everyone gets their credit card statement and they don't go shopping, and then July comes around and that's I think the second slowest period, and that's because everybody is at a cabin or camping. You know, you buy all your marshmallows and this, that, and the other thing, and then you go hide out. You know, you don't have 5 family members going to the grocery store 3 times a week, you know, as a social thing. You know, walk in, spend $17 on coffee, put it in your little coffee cup in your shopping cart, and then go up and down the aisles, and there's billions of people there. But here you have classic psychological going on here. You have a lot more bodies running into the bull and into the holiday season, and you had a full reversal going on here. So the thing here is you may get, you're going to get holiday numbers on here, so you might get back and forth. But I would no options, grr. I'd be, you know, if I'm in this, I'd be thinking about getting out of this deal because of the bodies ran into it, and that's all you got. You know, here's where they're at. So I'd lean towards here. You know, you get a breakout, you come through, you try again, there's even more bodies. So you found new buyers, but you couldn't muster a new high. You know, if you come back through, say 40, you know, 40, 39, we're already talking, what, that's a 5% drop. You know, we're, you know, in 3 days, you could lose a year's worth of return kind of thing, right? So the retailing side, this one here, look for weakness on here. I just don't like the psychology on that. Developed market, I wish this one worked. We're down to 20,000, but I'll leave it at that. That's developed bear. Maybe it'll pick up. You know, it's one of those things too. If it's not working because we've been in a bull market, but it's kind of like SDS and QID and things of that nature. What do we have here? Regional, 38,000. See, fat bar. So the bears in the regional banks finally gave up. Doesn't mean it won't continue, but it basically means they said, I had enough. And which would be perfect. That's now you're going to go in and, you know, you'd go back to 22. So 11. So here's a double. There's only 40,000 in volume. But how I look at it from a tech side of it is that the bears finally gave up. So there are no more bears. So it's susceptible to a swing. But we'll pass on these. They're getting even smaller. LBJ, 24,000. Okay, same thing again. You know, you had the moves in here. You saw the bodies come in here and just a blast. Thin though, but just a blast. And this is the bull. So this would be like an ABC pattern. I just think this is going to continue lower. And then Korea kind of a bounce down in here, but it's weak. What did we get? Not much of a bounce here. Yeah, I'll pass just because of the volume. Sick, same thing. And Japan, I'll pass. That's their paper one, right? Okay. Japan has a lot of bodies in there too, so Japan would be susceptible to a downside move also. And I think that's it, right? What's this, a hammer on Treasury Bull? Wow, we get down to the last one, 5,000. We have a weekly hammer on 10 years. So what do you know? Probably a swing up to here, 45 to 49. I wish there was more than 5,000 in volume. But that's how I kind of look at it, is that you have a hammer bottom here. So you should be good for a rally in debt, which probably means that the stocks come off, dollar comes off. Then, you know, what happens if oil comes off? And then dollar comes off, gold should go up. So there you have it. Those are 3 timers. BRZU. Silver. See, the bodies are in here, though. Well, it must be arbitrage related, because who's going to hold from 29 to 12, right? At some point here, you're going to have to call it a day. That's where I figured you'd see it come up, but this has to be arbitrage because it is the metal. Emerging markets, this looks like a bear flag. FAS, same thing, a washout, double hook, kind of on the ADX turning down. So at best on FAS is a sideways to up pattern. But I think, like I said, I think we're going to get a lot of volatility this week. And hopefully, like I said, everybody has a plan on, stops on, and that kind of thing. And unfortunately, like Brexit and the election, and now the referendum, you're going to be limited to basically futures unless you have access to trading, London stocks, things of that nature. Foreign access or liquidity. Okay. So yeah, so this is U gold. We're at 9. It's kind of nice here. We're talking dimes here. Dimes to dollars, basically. Yeah. Like I said, it comes back below. Gold comes back below. There'll be a precipitous sell-off here on gold. Yang. They still hold in there in Yang. Still room to run. The buy the dippers, that's what they were doing, buying the dip. Real estate bull, not working. Brexit, interest rates. That though looks like, what are we talking here? This may be a one-day deal though, 300,000 though. You may get something where it runs up, quickly. I don't know about short interest in these little ones here. Yeah, this looks like here's the breakout, ran up. Now this looks like the NASDAQ or the Russell, right? Same type of thing. I mean, if this shows up, that's a retest, but that sucked up everybody. That took out everyone here, right? You had your breakout and it reversed. At best, I can call this a retest. So, but you're going to have, if I'm long this, I'd definitely be thinking about, lightening my load somewhere up in here. If I'm lucky below this, then you're talking, you're dropping again. All of a sudden I start pointing down here, well, if this doesn't hold, you don't think that's going to hold because you broke through. So now all of a sudden you're from 57, you're at 36. I mean, you've already chopped this thing. What? Little like 40%. This is, I don't know about you, but I can't wake up one morning and go, wow, I just lost 40% in a week. This is, let's face some reality here. If this doesn't hold, then, I don't think this would hold. And you're back down to here at 26. So you're cut in half. So just like I said, it's tough. I stand on my box. I've been doing this for decades. Like I said, in January, both metals, nobody wanted any of it. I said, I will take it. Metals, commodities, right? I'll pass. A couple of them I'll stay with, natural gas and British pound. Equities after break, right? Kevin said at 1,800, I'm looking for, 2,400. 2,200 was what I wrote in 2013 when we were at 1,600. I said 2,200 by, we got 2,200 and here we are. And after Brexit, I said, you're on your own. So it is tough when I stand up and say, I don't like what I'm seeing. I take it, which is fine. It comes with territory, right? Some people make it up as they go along. They can't remember, which is fine. Other people are there for, other reasons. And so, but that's how I take it. So the thing here is that, it feels comfortable in a group setting. But, like I said, I don't like what I'm seeing. We're long in the tooth. This is the macro thing. Yeah, I'm looking for the stock market to double in the next, 8 years. But in the meantime, I don't like what I'm seeing. I don't, so it's tough, but the thing is what's the best part of that is that these options, just like I pointed out with the Qs, let's take a look at that real quick here. Since my 20-minute videos are now an hour long. Here's where we were in June at 101 and a half. Up in here at 119. I said, I looked and I saw the 2019 January wow, what was it? 119 puts were, I think they were 13 and 11. They'll buy it. This is computer generated because there wasn't any, or market maker, because there wasn't any open interest or volume. But those were the numbers given. It was 11 on the bid side and 13 on the. And I splashed a couple on the dum-dum screen. It's just for a reference point. Okay. Well, we were just there, and you're going to give me all of 17, all of 18, and all of 19, all of 17, all of 18, and then into the first, into 2019 for the Qs to get to here. Well, it was just here. It was just here a few months ago, and you're going to, so, if I say, well, I think now this is a bear flag, and on weekly, daily, the shoulder, head, shoulder, if it loses 13, what do we have left? 10, 4, 1, all of a sudden we're down to here, because you can see how this stuff can collapse in a hurry here, especially with the people that bought after the election. Okay, after they're beginning to get cleaned out. And how about this one? They weren't in the Russell, right? But the Russell took off. It's that time of the year, so that's the Santa Claus rally, blah, blah, blah. Well, it's like, we're talking some fat percentages here. Once if this was a support level, 113, all of a sudden now we're back into the sideways channel again. You could be rolling over here. Here's 85. I said a haircut cut in half. My math was off a little bit here. If you go from 120 to 72, and this is just a previous, this is S2, S2, S2. Here's PIB. All of a sudden you're beginning to talk about stocks are at a 3 and 4 year low. Like I said, this is off of a longer move. This was China. This was basically the raising of interest rates. This is Brexit. This was oomph. And then, like I said, I can see this thing coming down 9 months from here. What would that be? September, October? Yeah. So, however you get there one way or another, like I said, we're rolling over on the futures. So, I lean towards the short side there if there's any bounce. But we're running into FOMC. What do we know? How is this looking? You had the same type of pattern here too, right? Here you had the one break. You broke out for 1 week. The following week you came back half. You came back again. Couldn't hold it. Swoon. And you all of a sudden now you're taking out months. In 1 week you took out months worth of trade. And then all of a sudden, China comes through, and all of a sudden now you're taking out, let's say, a year, in a week, in a 1 week period. So, like I said, it's difficult for you to, but that's what I'm looking at. It's not that it's going to happen. It's just that, mechanically, if it loses 113. I don't think it'll hold the 110. It's back into the trading. Now you're talking 90, 94. You're going to have a lot of people who are going to be believing, and, all of a sudden it's 72. I'm not saying it's going to get there, but just start drawing some trend lines on here. And, hey, we'll see. Like I said, for the amount of crap that I have taken since 2163, so my intentions are there. That's my plan. I don't like what I see. It's, blah, 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 blah. The market, it's susceptible, right? So it's I can't explain it. I jumped up and down in 87. I jumped up and down in 2000. I jumped up and down in 2007. I'm jumping up and down again here too. It's just, I don't like what I see. We're getting a large macro change. We're now raising interest rates. So you have multiple generations that have never seen that before. And try to explain to somebody, my first home was, 14% or 16% or, mortgage. What? Yeah, but those little shacks, those 1960s and, built homes, 70s built homes, those little shacks, they tripled. And that's we're gonna be, it'll be interesting times going forward. There'll always be bull and bear markets. There'll always be, secular bulls and cyclical bulls and bears. But like for right now, it's one of these things that it's, once we turned after the election, even my little gut went, well, hold on a second. And then I thought, well, geez, if I turn, who else is left that was bearish, didn't like what, and all of a sudden they go, hold on a second here, and you have to reevaluate what's going on. But with the NASDAQ here, it's one of those, it's like, they're going to need to get on board, or, when everyone, looks at their charts, they're going to go, well, if this one's cracking, what about the other two? So, but I'll leave you with that and do one on commodities now.